Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look at the Aussie versus US dollar as we head toward the FOMC rate decision at 2 p.m. and the Fed Chair's press conference at 2:30. What levels are in play? I'm going to talk about that in this video, so let's get started. Looking at the 4-hour chart of this currency pair, if we look at the high price in trading here today, that's stalled against the 200 bar moving average on the 4-hour chart. That level comes in at 0.65399. And represents the first of a series of moving averages that would need to be broken on the top side if the buyers are to take more control either before or after the FOMC rate decision. Including those moving averages is this green line right here. This green line comes in at 0.6556 and is joined by the blue line, which represents the 100 bar moving average on the 4-hour chart. The green line, by the way, is the 200-day moving average. So those two moving averages need to be broken at 0.6556 to increase the bullish bias. Above that is this blue line right here, and that blue line represents the 100-day moving average. In trading last week, the price fell below the 100-day moving average, and this week the price has been able to stay below that level. So getting above the string of moving averages would be needed to increase the bullish bias after the FOMC rate decision, a more dovish Fed, a more conciliatory Fed toward easing policy sooner rather than later, or on the first sign of any sort of deterioration in the economy, would lead to that type of movement in the Aussie versus US dollar. On the downside, we are staying below these moving averages, keeping the bias a little bit more to the downside, more to the bearish side for this currency pair. And if we were to characterize different levels that we need to get to and through, it would include this low price from about 4 weeks ago at 0.64864. Then we'd look at the low price from 3 weeks ago at 0.64789, followed by probably this swing area down through here between 0.6445 and 0.6455. That level corresponds with different swing highs and lows are going back in time to here and here and here and here. And then we found a low here before moving to the upside. We return back to that level here before moving higher. So that level would also be another key target on the downside if the price is going to go lower. So the roadmap is set for the Aussie versus US dollars. We head to the FOMC rate decision. It's a matter of which way the Fed chair and the Federal Reserve is going to shove the dollar. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.